Right, I promised a whole bunch of you video reviewing the euro dollar. Actually, I'm looking for shorts. Alright, maybe to restart this entire thing. But then, okay, this is the analysis I posted on YouTube a couple of months ago. And yeah, to the T, man. Right, so we had that fair value gap in the premium price was in an uptrend late year 2023 towards the close of the year, and price traded above relative equal highs and seeked to push into that imbalance structure, that fair value gap, right? So that's what we were looking for. It went, just tapped in on the low of the fair value gap. That's the high, that's the low. The fair value gap is in premium price. I'm just gonna randomly put it up like that, above 50% fib from swing high to swing low. That's it. The targets were the sell side liquidity resting in there and the sell side liquidity resting beneath here. Anchor point low W. All right. V M. Right. Then I got a miniature. Essentially, what I am hinting at is this M structure can be comprised of price action, where price delivers just above what rests in there, buy side liquidity. Right? Why did I paint it out here? I like the opens and the closes of candles. Why? If I were to use a line chart, this price action doesn't exist. The wicks, I've said this before. Right? So I like the candles. So the opens and the closes of the candles. I'm looking for a bull market, an up market, a buying market. Right, long term, throughout the month. What supports my intuition, excuse me about that, is, let me just click down so I can see it there. There's trading view up there. Ha 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 ha. Had a lot of fun. Okay, what do they call it? Right. The euro strength is often observed in EURUSD pair during the months of March and April as well as September. So I think in this case, strength means bullish action. Let's look at a 30-year average. I think that's what they're going to give us here. 20, to give us a 20-year average of the euro dollar. The euro USD is usually bullish in the month of March and in the month of April. But in mid-month, March, we get a retracement. All right, and that's what I want us to go and study on the dollar. So a 20-year average on the chart there says we get a retracement, and that's why when I initially opened the video or initially started the video, I said I was looking for shorts. I am, however, supposed to be reviewing what had been going on the charts, but don't worry about that stuff. I'm just gonna stitch it all up together and give you one full package that's gonna help you project the future and also learn from what has happened in hindsight. Right? So we're looking for an inefficient area, basically an imbalance in price that price hasn't gone into. I'm going to take the bodies of the candles once again. Okay. So that's our buy side inefficiency. Right there. Should be an orange equidistant channel. I won't for the purpose of this video because I already got one up there. Alright. We're looking for price to go into that structure up there because of the market efficiency paradigm. Excuse me about this. Should be on the top of this candle. Okay, on the open of the candle. On the close of this candle, open of that candle, it's an imbalance. It was used on a smaller time frame, but then price hasn't necessarily used it on a bigger time frame with that sort of context. That's the context I'm looking for, right? So if that's my buy side inefficiency, it means I need a sell side imbalance that price is gonna move off of in order to drive into that, because price is moved from imbalance into inefficiency. The market efficiency paradigm by Michael Huddleston. All right. So if I'm looking for second V, I'm looking for an imbalance that price is going to go down into and then continue pushing upwards. So when I look leftwards on the chart, I'll need to use annotations for this. Capture. When I look leftwards, previous month, the month of February, around late February, we got high, then price pulled away and moved into a consolidation to end the month. All right. This high is not just any high, it is a exactly. So if it's a swing high, when I'm looking rightmost on the chart, I have to label this now. I'm just gonna go ahead and do that. It's gonna straighten it out for me. I'm gonna say SH swing high. All right. The candle that breaks the swing high, this candle in here, gang, right? I'm going to take the close of this up close candle and I'm going to take the close of this down close candle and I'm going to call this entire area in here What form of imbalance is it? This is the structure we're looking for then. Sell side imbalance, buy side inefficiency. This is the buy side inefficiency. Alright. Can price go lower than that? What am I looking for in this context? Alright. I'm looking for price to trade into halfway of this structure like this. Right? And maybe it's going to rest in there. Then thereafter, I anticipate for price to move upwards as a variation of what I'm looking for. So in turn, I will be looking for W into level 1 consolidation, V into level 2 consolidation, V into level 3 consolidation, M, right? Then I'll see price come back into market maker's fair value, which will be in the discounts. So now let us take the Fibonacci and place it above the swing high, or on that swing high and on the swing low. We have 50% Fibonacci resting somewhere in here. Let me 50% Fib. Alright, it's resting above right here. Okay, it's just hovering in there. I'm going to go over onto the MetaTrader and actually annotate using the Fibonacci. This consequent encroachment, right now, let me remove lipstick to remove and annihilate any confusion. Forget the Fib for now. Let me just remove it. I want to draw a box in here around the structure. Remember, the close of that candle, the close of that candle, laptop straightens the thing out. Alright, the midway of that box, that I'm using these handles to mark out the midway. The midway of this box is called consequent encroachment. What this simply means is midway. Alright, and since I'm treating it as a fair value gap, I'm treating it as a structure of imbalance. You can also use the word equilibrium, although this would be best with an order block or something. Alright, another one would be this is a term, mean threshold. The mean. Consider this a range, where this is the high of the range and this is the low of the range. The bottom side of the box is the low of the range, alright? The L. Okay, excuse my L, kind of fell down. Alright? When you take the high and you subtract the low and you divide that number by 2. So it's the high minus the low and you divide that number by 2. Mathematically, you get the average, the mean, which is usually halfway. Hence why I am referring to the Fibonacci, which is lying just near or above the consequent encroachment, the mean threshold. So we can expect the market to buy from that area because beneath there is discounts. This entire area in here is market maker discounts. And above 50% fib, that entire area in there. Okay, let me just put it here, right? little bit. That entire area in there is premium. I think that's how you spell premium. Alright? So we're looking for price to be premium before we can short or sell. The seasonality of the 20-year seasonality of the March euro dollar says price around mid-March, end of March is going to retrace from the high and move away from the high, move back into consolidation to begin the month of April, which is also a bullish month. Okay, that's what we're looking at on the internet. 20-year seasonality. Oh boy, thank you. Click done. I'm gonna go back. Okay, March, April. So end of quarter, beginning of second quarter. What's a quarter? Divide a year in segments of 3 months. So this is the first quarter. Right? This would be the second quarter in here. The third quarter, the June Sep quarter, and then the October, November, December quarter. Right? So they say it's bullish in September on the internet. There it is. This is the 20-year average of the euro dollar on a seasonal basis. Season is 12 months. Right? Season is 12 months. So we have a bear season, a bull season, a bear season, a bull season, a bear season, and a bull season throughout the year. Alright? And it helps you to cut your year up into quarters, because then you can see that, okay, end of quarter, things change. Mid quarter, things change. Right? The beginning of a new quarter here, right? Things change. At the end of a quarter, things change. See how the quarter ends in September? The beginning of a new quarter, things change. That's why the timing element is the most important part of the system. And simply put, if I can say this, simply put, I'm now going to go down to a smaller time frame, the hourly chart, and I'm going to look for reasons. Okay, wait, let me do those annotations first. Promise to go back. So in future, you don't bite me and you say, you didn't say. I'm also going to do the Fibonacci. Let's see how it lines up with this structure in here. If this structure is in the discounts, we are purchasing. Right? If it's in the discounts, we are buying the euro dollar. Okay? It's almost in line. With the consequent encroachments, the midway of this structure, as I had insinuated or suggested. Right? So we are looking for consolidation of some form that's going to make price bearish, and then we're going to get those bulls to end the quarter. Right? So yeah, I know at the beginning of this video there was a little bit of noise here and there. It's how I trade, man. I trade and I sit around and watch reels, play music. Okay? So I can relax and zone in. So let's go down to the hourly chart. I don't like these annotations. It's called lipstick. So I'm going to remove them. I'm only going to use the efficiency paradigm, imbalance, inefficiency. Alright, so let me go down to an hourly chart and look for a structure in here that can draw price downwards and get into it. Then market makers will work with that structure, and so will I. Simple, man. Let's look left from in between these two lines. Just look left. Okay, I'm going to use annotations. Don't go far left. You don't need to go to Kingdom Come to understand what's happening on the charts. You just look left, but not too far left, because you did it on a bigger time frame. So it's redundant if you do it again on a smaller time frame. Yeah, well, just want to trade currency today. Okay, so swing high. Alright, I'm somewhat 30 minutes out from the end of Asian. Right, there it is. That's a swing high. So let's look at which candle broke. I'm going to take the bodies. Which candle broke the structure? It's this one in here. This candle. Alright, so what I'll do is, because of that, I will consequently take the open of this up close candle, and I will take the open of this down close candle, which is also offering me an order block. This is an order block, by the way. Last bearish candle, that's what they say. I don't care. But this structure in here, because it broke this swing high, let me remove that. This entire thing in here is an imbalance. So price already did this. It went out of a consolidation, gave us a stop hunt low. I think this was on Friday. So this was the context, the trading context. Consolidation, stop hunt low. It wasn't enough. Went back into consolidation. They hit the number another time, second time, then it went. So I'm going to use that structure in there to interpret what price is trying to tell me. Alright, so that high price points from Friday, I have buy side liquidity resting in there, and in here I have sell side liquidity resting in here. Since I'm anticipating that the markets will be in a bullish market, I can then conclude that I am looking for a consolidation. I can even take this tighter one in here. It's okay, because it's a new day. Like Sunday is a different day. Sunday night. Okay, got the consolidation. Looking for stop and low, and then a buy. Okay, that's what I'm looking for in price. Okay, don't look too far left. I know we're supposed to be counting levels on the hour one, but I'm shifting down to two strategies. So with this one, I'm just looking at where is money sitting. ICT. I'm using ICT to know where money is sitting and the most ideal probability of what price will do. So the most precise thing ICT would do here is this. This is how we draw the imbalance. He would use the high of this down close candle and the low of this up close candle. Voila. Alright, and look at what this structure. Okay, let's remove the liquidity diagram. I just want to show you something. No, calm down. There it is. Okay, hope it's simplified enough. You remember on the daily, the open of that up close candle. I mean the close of that up close candle, and the close of the down close candle that gave us this big imbalanced structure. Go back in the video. Look at how this area on the charts, the smaller imbalance on a smaller time frame, it's not smaller, it's just a small structure, it's on a smaller time frame. Look at how it coordinates. Look at how the context of this imbalance coordinates with the low of the imbalance that is on a bigger time frame. To me, I'm getting another confirmation that price is bullish, and I haven't even used an indicator. Right? So I'm just considering this entire thing as a big consolidation structure. Give me one perfect one. There you go. Okay, I'm just considering this big Friday price action as a big consolidation structure. One that can bring good deeds. So I'm going to look for the low of the day here. If I'm not offered that setup of the low of the day, let's say price just trades out of this tighter range in here, the candles only, right? Say just trades within there, and I get a straight away move upwards, seeking that buy side liquidity resting up in there. That's okay. That's a variation on a theme. I'll just need to learn on how to catch those even better as time goes by. But for now, I am certain that this triple top structure in here is gonna give me that down move. Alright, so I want 20 pips stop hands. I haven't looked at the chart, so we're going in. This is the first time I'm watching the euro dollar. Okay, that's the variation I was speaking about, where price just goes straight up. Right, let's go look at the minute 15 independently of all the other bigger time frames. So in about 30, no, not 30, 20 somewhat odd minutes. I know this watch is sort of off by a few minutes, but I also know it to be true that this is where I use price action on a more sinister level. Okay, I think Oliver just posted something about the euro dollar in the group. Oh yeah, he just okay, this can't be a coincidence. He also did annotations of this being a big consolidation structure. He used pink annotations and he circled it with a green. Let me send a voice note. Oliver, dare I say it, I am literally analyzing the euro dollar right now. And the way that you have annotated on your charts, somewhat similar to what I'm doing here. Honestly, it's somewhat very, very much similar to what I'm doing here. So I'm looking for shorts that are going to take price down to... Okay, I'm going to post a video on YouTube. You're going to get it there. But then, yeah, honestly, the number $1.09 and somewhat 20 pips number, which is the low of the day from Friday. So I'm expecting for price to go down there and grab that number, and then it's going to rise back to where you have that nice thick purple block on your annotation. Thereafter, it's going to run the high. It's going to go above the high because I'm looking for one more push upwards. But it's all in the video, and this voice note is now part of the video. It's kind of rough, okay, sitting around, chilled, doing my stuff. You're gonna love this. Absolutely. Right, so that's what I was speaking about, stitching things together, bringing the reality. Actually, okay, but I got some really confidential corporate stuff there. So, no, I'm just going to leave it. I wanted to open the WhatsApp. Okay, let's map the dealer. The dealer's clock is currently saying 7:30, which means it's 2 hours behind. It's currently 9. So this wasn't midnight, it was around about 10 o'clock. Wait, if you add 2 hours, it was 2 a.m. This is 2 a.m. because I gotta add 2 hours. Yeah, if I add 2 hours, it's 9:30. So if I add 2 hours here, it was 2 a.m. So I'm gonna start drawing my box from there, man. 2 a.m. Don't ask why. If you don't have time ribbon on your device, you should have contacted me by now, right? So this is gonna give me my initial high and low of the day, which is nah. I'm just chopping the stuff down so we can go down to what's happening on the minute one, and I'm gonna stop moving quickly. Right, so the color of this box, geez man. Oh wait, we had old analysis here that I needed to review. I think you just gotta, let me change the time frame. Right, there it is. So this is the structure I somewhat want to draw out here. Otherwise, I had just taken a template of what you saw on the hour one and the daily, and I pasted it on another chart. So for me to be able to find that annotation, I guess I'll just need to, okay, not that. Control B, not Command B. Just need to remove everything here. Okay, yeah. Those are lost objects. Oh, dude, what am I doing? Cornflower. Sky, no, cornflower, please. It's more definite on charts. Close. Right? Uh-huh. Let's level counts before I do that. So don't chew my head if anchor point of WV, right? This was the V structure, 2 days of consolidation. Went up, end of day consolidation, beginning of day consolidation, stop and low. So this is your V, and here this is your V. Price took out that liquidity. Now this is your M. Alright? So if we're getting price discounting what's happening in there, and you take the Fibonacci, you place it from here to here. You're looking for price to go just beneath 50%, which is resting right about there. Alright? I'm gonna go on the charts and do this. Click done. So that's why I said forget level counts, so just focus on what I had to say in here. Alright? There it is. You remember the structure in here? The structure of imbalance. So I'm going to use this as my target. So market efficiency paradigm. This is our sell side inefficiency. So price needs to move from a buy side imbalance. Where is it? There it is. right? I've just gone back onto this one for one strange reason, because I want to show you something. So price is going to go from imbalance into inefficiency, right? I'm missing the drop. It's okay. Just like how it came beneath the liquidity and then it went back for fair value gap. Alright? So I want us to measure 25 to 50 pips. So I'm going to take this box, and I want to paint it gray. I'm going to use a slate gray. What's this? Gains bar. Okay, Gains bar is good. Okay, Gains bar is the same color as the chart. Dark gray is also good. Okay. So this box, I'm just going to take that corner handle. So I'm looking for that number to change to 250. I could easily type it in. There it is. But then I won't. So I'm going to hold down the control button. Okay, now this is what I want to speak about. Just going to remove a little bit of lipstick. Okay. This is what I am absolutely taking my entire career and risking on. Alright? This is what I'm going to take and bet my entire career on. Market makers usually extend the consolidation by 25 to 50 pips top hands from the initial low of the day or from the initial high of the day. So they usually extend the stop hands range by 25 or by trying to draw to the top of that box over there by 50 pips. Jesus, man. So the top of that box, wherever it goes up to, above that barrier on the screen. So this would be a 50 pip range, right? Or from beneath, from the ILOD, 25 pips to form a low of the day, or from the ILOD, 50 pips to form a low of the day. Look at how the 25 to 50 pip stop hunt range, this box in here, the gray box, I sent the stuff in the definitions. Look at how it coordinates with the hour one. Exactly, sell side inefficiency. Easy grab. So I know for a fact that I'm betting on that because retail traders are going to be starting to consider this structure sooner or later as head and shoulders. So then they will measure from head to neckline, then from neckline to direction of reversal. So I can trade both directions here basically, but I'm looking for this one. I'm looking to settle my orders in here, long in here, and make somewhat 10 times what I have now. I'm gonna start with like $5, I don't know. Let me remove the lipstick. So I'm looking for consolidation, stop and low, trend. I'm looking to trade in this trend in here. Seeking liquidity resting above in there. Remember, WVVM on the R1, it can mean that price is just going to remain in that structure, in that consolidation structure. Right? It's just going to remain in that consolidation structure for a couple of days, of course. It can just trade in between here and here, or up there and down here. For like a couple of days is 2 days, Monday, Tuesday, and there or thereafter we can have price seek this liquidity resting beneath the low of the day, Thursday, blue tracer. There's the blue tracer. Low of the day marker, low of the day, half the day marker. Let me just mark out half the day from Friday. This is the consolidation range probability. Consolidation range probability number 1. It's the market efficiency paradigm. Number 2, it's the stop hunts range. Number 3, it is the lows and the highs of the days from the previous days. Friday, low of the day. Friday, high of the day. Thursday, high of the day. These are called pivot points. Okay. Thursday, initial high of the day. Oh, brother, what is this? Why are they coordinating with these zones? Why are those pivot levels coordinating with those zones? So you gotta think in that sense, but I don't like using this many annotations on the charts. So I just really like to keep shit simple, and I just keep 1 or 2 annotations. But I really like the low of the day, half the day marker from the previous day. Right? So I don't usually draw this up manually like this, but then this is a Macintosh, and the MetaTrader 4 on here has a tablet interface, graphical user interface. So therefore rendering my software inefficient on this computer. Study of liquidity. It was resting above here. We got a swing low. Price punctured that swing low with this one big candle. Okay. I'm not going to use that word ever again. Punctured. It went through the swing low, rendering this area in here. Come on, you should be mumbling it beneath your breath now. This entire thing in here. Alright, ICT wise, ICT would be taking the highs and the lows of the candles. The low of this down close candle and the high of this up close candle. So this entire thing, this is buy side liquidity resting above here. And look at what time it is. Exactly 10 minutes before the end of the session. Let me look on a different watch. 12 minutes. Alright, so we're going to be inducing longs. We're going to be inducing people to take long positions. Alright, so you can expect price to range from here back into that structure, convincing the entire retail world that price is long. they won't be wrong. It will be long, just not now, later on in the day. Alright, so I'm looking for shorts around this area in here when I'm looking at the minute 5 time frame. Otherwise, with regards to the minute 1 time frame, what the video started on basically is a missed opportunity. I'm not very much worried about that, right? Because I'm still rolling into a session. It's only now that a session is going to begin, and that's why I'm not so worried. Okay, I was supposed to be here end of Asia. I'm here end of Asian time, beginning of London. Beginning of London is in about 39 odd minutes, 37 odd minutes, yeah, bro. 37, 39 odd minutes. Because I'm looking at two different watches here. On my phone, it's 9:49. On the Mac here, I think I need a software update or something. And we can speak into that. Okay, this candle provides us a swing low. We're looking for the candle that pierces this swing low. And it's this one. Needs to draw this much properly then. So I can consider that my buy side inefficiency already. Okay, this is why I hate MetaTrader then. Annotations can be a bitch. Sorry. So we got relative equal highs. Price swept the relative equal highs. This is the entire swing low structure. Okay. That's why I like taking the bodies of the candles. Again, let me show you why. Alright. No candles. See, the opens and the closes coordinates with where the line chart opens and closes as well. So it's more reliable data, basically. So I can turn it into more reliable information. So do me a favor, take the Fibonacci, use the old swing high, swing low. Don't use this one for now. I'm gonna use it. So price came into a discount. That's why we're seeing bullish action. But now price is premium, and our fair value gap is in the premium. Alright, imbalance, it's in the premium. So we're looking for price to go into that, tap right in, then drop right out of it. So now I can start using this Fibonacci. That's why it's a confirmation tool and not an indicator. It's not a fortune teller. Above 50% price is premium. We can start looking for sell trades. Another structure that we're looking for is this liquidity void. Price is already within it and trading above short-term high, old high. So let's wait for price to go into that structure in there and drop. Alright, I want to be preparing to take executions. Okay, since this is a MetaTrader 5 account, can I
incoming mail?
Okay. then I want to pause the video right in here. Okay. I could easily just use but hey, I don't know why this thing's glitching. Okay, what am I doing here exactly? market efficiency paradigm. Okay, I don't know. I want to stick around long enough to get executions. Spread is sickening. Look at that shit. Jeez, man, look at the spread. Okay, it's kind of becoming a bummer now. Oh man, look at. How is this running? Like, look at the difference, man, between deriv and book spreads of markets. Okay. Okay, you know what? I'm gonna end here. I'm not putting money on spread like this, but I'm looking for shorts.